What's up, Kate? How are you doing today?
I am good, Drew. How are you, brother?
I'm doing great, man. Doing great. Hey, so I'm going to dive right into things just because I got a lot to talk about and I want to make sure I hit all the points. Kind of a confusing subject. So
Let's do it.
I'm just going to go through it real quick. So basically, what happened on Friday was there was the Silicon Valley Bank had a huge crisis. And all over the weekend, I was getting calls, texts blown up with people confused, wanting to know what was going on. So I figured this is the perfect platform to share all the information as to what happened. So, long story short, it started out where someone had gotten a hold of the bank's records of accounts payable as well as just the general financial stability of the bank. And they shared it because it was a little bit scary. So let's throw back to 2019. In 2019, Silicon Valley was funding a bunch of tech startups, a bunch, and they were giving them a lot of money, but they're also holding a lot of these accounts. Well, that was in 2019, back when interest rates were at an all time low, basically. And typically, what happens in the banking industry is when you bring in a large sum of money, you usually invest that money, and oftentimes you're required to hold some sort of an amount, a percentage of mortgage backed securities. And so, what was happening with these mortgage backed securities? Well, they generate interest based on the interest that you are paying on your houses. Well, in 2019, 2020, you were paying next to nothing for interest rates for mortgages. And so, they're typically safe because they are, no one's going to lose their house. But again, it's, you're going to pay interest and it's limited. So they were buying all of these interest, but low interest producing products, but lending out high risk money. And so what happened is now you fast forward and the markets are declining pretty heavily. I mean, we've given up most of our gains across all of the indexes. We're back to break even zero, but we were down 20% plus in 2022. And so you've got all these risky high tech startup stocks that are, or high tech startup companies that are being funded by this bank or that this bank is holding their funds. Again, someone got a hold of these financials and spread them throughout and said, hey, this is kind of worrisome. Like these banks, they're not going to generate a ton of interest. And so, what all these high investors and these investors that had a bunch of money did is they went and they actually started pulling out all their money. Well, the other big thing about mortgage backed securities is they're illiquid. And so they were asking for money that the bank didn't actually have. And so the government had to step in, bail them out, provide them money. And so that's what you see that big decline in the stock price. And that's what you're seeing all over the headlines about the Silicon Valley Bank. And essentially, it's just government had to bail them out because if, we lost that bank, it would just lead to a lot of mistrust in the banking industry as a whole. And then we'd be thrown back into panic mode with the 2008 crisis, which we're not in that same position right now. This was just one particular bank that just overexpanded themselves on the idea and concept of tech startups. So that's that.
Interesting, bro. So ultimately, we can conclude that they just over leveraged that bank
Absolutely.
itself.
Absolutely. It's not a fundamental banking issue and a fundamental thing to worry about in the banking industry. Again, the bigger banks like JP Morgan, Wells Fargo, they're detached from the mortgage backed security requirements that this bank was leveraging because of the 2008 crisis that happened. Back then, they were purchasing a ton of these CMOs, and that's where they were over leveraged in that market. That's why we saw the fall because of the housing crisis in the banks. Now there's a lot of regulations and guidelines that prohibit that. So it protects the
Right.
bigger banks, but this small bank just got over leveraged. Exactly right. So
Dang, that's intense too, because what we're seeing a lot in at least the, multifamily space of real estate investing, you have a lot of guys in the past 2 years who have done something very similar, and that is they have bought properties with a very small return on investment, and their cost of financing, their cost of debt was astronomically higher, right? So they'll buy a property at, let's call it a 3% cap rate, which is basically your return on your money if you paid cash for the property. So if you paid cash for the property, you'd get a 3% return. That's your cap rate. But then they borrow their money at like a 7 to 8% interest rate, right?
Yeah.
So
Yeah.
that's a huge gap that they're over leveraging their money. And their hope is that, okay, the market's just going to keep going up. We're going to bank and invest our money based on appreciation. And right now, that's just not the case. So it's going to be very
Absolutely not.
interesting to really see what happens to those guys. And a lot of people think that, they're going to have to end up selling at a loss because they just can't, cash flow the debt. And so um, I think for you and I, maybe we can have one call to action today, just based on this
Absolutely.
weekend.
Yeah.
I think it's just be very smart with your investments. Do not over
Absolutely.
leverage if you cannot afford it.
I love that. I love that. I think it's perfect and it's totally accurate. Just making sure that you have the right cash on hand for emergency savings and you're not leveraging yourself too heavily in different products that could make you, be susceptible to this sort of problem. So I agree.
Yeah, awesome. Drew, do
Sweet,
you want
man.
to finish us off just by promoting our meetup at the end of this month?
Yeah. Yeah, man. So March 31st, our next NGRN meetup again at the Sands Club. I look forward to seeing you all out there. It's going to be a great event.
Absolutely. Yeah, I've had a ton of people tell me they're pretty stoked about it. Can't wait. So, like we said, everyone is invited. Invite people, bring friends, bring people who are interested in business entrepreneurship. We love having as many people as we can out there, just sharing ideas and getting those referrals in with each other. So,
That's
invite as
it.
many people as you can. Yeah,
That's it. All right, Cade, well, you have a great rest of your week, and we'll look forward to speaking to you next week.
sounds good, brother. Talk soon.
Talk soon.